Good morning.
Good morning. Thank God it's Friday.
Yeah,
Yeah, I was just thinking the
we
same
were just
thing.
saying that.
We were just saying that.
Good morning.
Oh, good morning. If they still had TGI Fridays, I'd probably go eat there this weekend.
Man, I love their potato skins. Those were the best. I could make a whole meal out of that.
God, they've been gone for a long time, haven't they?
Yeah, there might be some still around. I don't know, but they're not around here.
Oh,
So,
like here, look, like Applebee's used to be big, and now
yeah,
we don't. I haven't seen one of those in years.
we still have one down at the mall. It's actually pretty good. I
Yeah.
don't mind it. Fridays, I always like the places that had the bar in the middle with the chairs around it and then the seating around that, kind of like Applebee's and TGI Fridays. And you don't see that very
Seriously.
often. All right. Well, it is Friday. Um, Fun Friday. Let me see if I can share here. And I can. Um, Looks like we're down a little bit. One thing I've talked about for a long time is, the economy is really about, sorry, I got allergies again today, consumer spending. And when consumer spending's up, the economy is usually good because people are buying things. When you buy things, producers have to produce things, whether it's your dinner or whatever you buy at the store or groceries or whatever. And when consumers aren't buying things, it's the opposite. Things start to shrink a little bit. And yesterday during our meeting, Challenger Gray and Christmas came out with their October jobs report. And U.S. employers cut 150,000 jobs in October. That's three times as many layoffs as last year, and the highest number for October since 2003. For the entire year, job cuts topped $1 million or 1 million jobs. Okay. And then I saw another story that talked about, Christmas is coming up. We talked about UPS, dropping 48,000 jobs before Christmas. And then I also saw companies are planning the fewest Christmas hires. How they always hire part-time people in Christmas season since 2011. So anyway, if that starts slowing down, people start, and we started to see like McDonald's and Chipotle and even Kraft Heinz talking about, the consumers are downgrading. You might not be buying Heinz ketchup; they might be buying, Sure Fine ketchup instead. Uh, and they're seeing that, Walmart's been saying, they're seeing a lot more people over $100,000 in salary coming into Walmart's now, and it's just something you got to be aware of. And if the economy moves down, the jobs get lost. People are going to be tighter with their money, and you're going to see less vacations, less frivolous spending. So keep that in mind. So that I think worried the market a little bit yesterday, and you can see it's kind of rolling over into today also. And let me come over the other thing that I think is worrying the market, whether you believe it or not, and something we've talked about is the AI valuations. We talked about valuations. We talked about Palantir being at 600 PE. The other thing that came out yesterday was they talked about Sam Altman and his CIO got on and Sam says they're on track to generate 20 billion in revenue this year. And then you go and look at what they've done. They've inked 1.4 trillion dollars in infrastructure deals, and the question's starting to come up, on how are they going to pay for this? Um, and then his CIO came out yesterday and talked about having a government backstop, which would be like a bailout for AI. They they backed off that a little bit in the day, but it caused a little bit of a stir through the AI world. And I think you're seeing that valuations matter. During the pandemic, you saw a lot of companies come out and a lot of money chasing a lot of companies that didn't make any money. And I'm starting to see that again today with AI stocks. And that's just me. It's my opinion. You can take it for what it's worth, but I don't like investing in or in companies that don't make money because they have to operate somehow, and that will be through borrowing or selling out shares, which dilutes your your holdings as an investor. So we've seen it before, and I'm seeing it a little bit now. Elon Musk did get his $1 trillion pay package. 75% have voted for it. So that's really good for him. Well, that'd be nice, get $1 trillion. We had some earnings out. We'll go through some of those too, but let's take a look at what we got in the charts here. Sorry again. All right. Might be a little quick today because my voice is going out a tad bit. In the SPY. Okay, here we are. Again, sideways right along resistance. The thing that I see here that is not good for anything is these oscillators heading down. All three are heading down. Even started on the stochastic, which usually gives us an indication back in the end of October. We're in November now, first week in November, second week. And we're under the 9. We're seeing converging Bollinger Bands and oscillators heading down. So still above the 200. So if you're investing, that's good. And we're still popping off the 50, which is good. But we're getting closer, and we'll see if we can maintain that 50. The Dow, 30 stocks, same kind of thing. Looks like same chart, converging Bollinger Bands. And look at the oscillators heading down on the Dow. So again, is that something I'd make me happy about going out and doing a trade? No, not on these. And again, I think the S&P just went up to almost 42% run by the top companies, the Mag 7. And it's over 50% for the Qs. And you can see the oscillators again. Here's your histograms, and boom, look at how far down that went just yesterday. Again, opening at the top, closing at the bottom. We're going to open a little lower. Watch this 50. We've done some bouncing off the 50. And then if we get past the 50, Bollinger Band, and then hopefully not the 200. But we're seeing the rolls again down on the Qs. We go into gold. Gold's been waiting around, right around our resistance level. And now we got all these moving averages all crunched in here together. You got the 9, you got the 20, and then the 50 coming up. But look how, we had a crossover the MACD, way back in 22nd of October, and we've just been down since, and you can see we're under the 9 through that whole area. And then the oscillators are just down. But gold is, maintained kind of a sideways, and we'll see if that gets a bid, if the equities keep going down. It could pop gold and silver. Silver looks, exactly the same. I would wait to see this MACD cross back over. We're starting to see maybe signs of that in the stochastic. And we're getting a little bit RSI just rolling right around 50. But if that starts popping back up, you'll see this price head up too. But we haven't seen it yet. We'll take a look at a Bitcoin. It's playing around the 100 area right now. You can see, we've done this before. I don't know what this line is. I'm going to get rid of this one just because it's confusing. Here's your 95 level, where now we're bouncing off the 100. We were at the 105, and now we're down here. We'll see if it can maintain that. Still following this Bollinger down. The Bollingers are widening out, okay, and you still have a widening out of the MACD. So, this is a good line of support. If it gets under that 100, we talk about a psychological thought about Bitcoin. It did pop down, during the Chinese $150 tariff scare, hit right on there, and now we're hitting it again. So it'll be interesting to see this weekend what happens. You get a lot of action, on the weekend in Bitcoin because, the other markets are closed, the equity markets. But again, we'll see if the whales are selling or if they're just trying to entice people to sell out. There's a lot of leverage in Bitcoin. There's a lot of leverage in the equities market too, the highest level of margin debt in a long, long time, if not in history, in both of these. So when markets go down fast and you have a lot of market debt leverage in there, you're going to see this cascading of falling prices, and before it actually gets stopped. Ethereum again, all the oscillators don't look so well. We tried to get a little bit of a bump, as we're riding past this 50, and we said that was or the 200. We said that was good. That was holding the 200. Well, yes, now we're not holding the 200 anymore on Ethereum. So again, we could see some more pain as long as we're still seeing this MACD roll down too. So you look at the IBIT. This is a Bitcoin ETF. This is where I got out when it went under the 200. I was in since the beginning, and I'm using the 200 as my investable line. This was a long-term hold for me, and not anymore. So again, it came back, tried to test it, got a little bit above it, and now we're seeing it kind of falling down the Bollinger Band, and you can see that right here on the MACD. And again, that crossed over way back here on the 13th of October, and really hasn't crossed back yet since. So we're coming up almost on a month on this one. So that's why I determined to get out. 200 is a long-term technical moving average for me and for a lot of people. Learned it from Paul Tudor Jones, and he's made money off of it, and it saved me a lot of money so far. We'll see if it continues to go down to support, or if we can get some bid and pop it back up. But right now, it's not looking like it's going to happen. MicroStrategy, same kind of thing. We've been under the 200 now, tried to pop back up back here in the beginning of October, and just riding this Bollinger Band all the way down. And we're going to open up a little lower, right at probably where the Bollinger Band is too. And look at the MACD here. They told you to get out right about here, and it would have saved you a lot of this here. So these indicators, do mean something. You got to read them kind of together. Because sometimes you get false signals. So that's why we have 3 of them, plus the moving averages also. But again, under the 200, if you're investing, you'd be out, just using one line. Talk about NVIDIA. This is 8%, of the S&P. So when this thing moves, the S&P moves. And, we had this roll up right to where sellers were. We had resistance was up at this level, came up, hit. Now you're seeing the 9 roll over. You're seeing the price action come down right to where resistance is, where it's really newly refined. We're going to open up below that and right above the 50. And again, here's the 50. You can see we bounced off that 50 before. Let me back it up 6 months and see how we did. Let's see, we've found support at that 50 before, found support. We're heading down towards it again. But again, look at this crossover here, lower momentum into NVIDIA. So, a lot of people, they buy the dip and, they don't know. They just buy the dip because they think it's down. It has a good price. I like to use the technical. So at least give me an advantage to say, if I'm going to buy in, is this the place I would buy in? And, it's telling me no, to buy in at this point, at least on a daily chart. Meta, poor Meta. Meta, keeps opens high, came down, closed low, right on the Bollinger Band. We're going to open lower again on the Bollinger Band. Still, crossover here, still heading down on the MACD, absolutely flattened out down here on the RSI and on the stochastic. Want to see this start turning back up, but we're not seeing that yet. We're just seeing this straight down move on Meta. And of course, it came after earnings, and earnings, they showed that they're spending a lot of money, went right below the 200, couldn't get out, and it's still down. So again, as an investor, the 200 would have been a good line, technically from Paul Tudor Jones to get out. And you go back and look, you would have gotten in about right in this area here in May, beginning of May at 597. And then you get out somewhere, in this range at 666. So, it gets you out, and you just put it in cash, or you find another place to put it and you wait for it to come back and get back in. But one trade, from May all the way to November on that. That's what we try to teach here, not just swing trading, but just pattern analysis and seeing which way the market is going, and the trend is your friend. And in this case, the trend is down until it's not. Okay. And if you're looking for a place to get in, the technicals give you a better idea when to get in, when to get out, even on the longer term. We look at Microsoft. Hopefully my voice will maintain. Then open up lower again, right along the lower Bollinger Band. You're seeing the Bollingers widen out, seeing the 9, the 20 coming down. We couldn't hold the 50. We tried to hold the 50. We're now down below 50. We're heading down towards the 200. And this is very steep on the MACDs. I've widened these out so you can see how severe these are, on all the downturns on these oscillators. So, if I'm looking at this, I'm saying, wow, Microsoft's down, I'm going to buy the dip. We might not be at the dip point yet, by looking at the oscillators, and that takes the emotion out of your decision, and it gives you something to blame it on. I'm going to blame it on the technicals because that's what my trading plan says. Google, has been pretty good. Google's earnings came out and they're showing that they're making money, even though they're spending money. And Trent's brought up AWS and how long that's been around. That's probably an indicator. And you can see here, this is a totally opposite look. We have a little bit down on the stochastic, but we're still in the 70s, which is pretty good. We're still in the 60s and 70s on the RSI. You just have to watch. We're seeing a little bit of a turn down, in the MACD. If the MACD gets below the signal line or gets close and crosses, you're going to see that the price action is going to come down and hit below the 9 here. And so the 9's coming up. We've been 5-6 days right at resistance. We see this 9 come up on a lot of these. It rolls and then comes back down. Something's got to be a catalyst to move this up, or we'll probably see that pattern. Is this a place I would buy Google based on this chart? No. I would be waiting. You have your risk downside and your reward to the upside, and you got sell orders right above that. So again, this is how you can use technicals to help you decide when to get in and out. We're not day trading here. At most we're swing trading. We're looking for swings up and down. And then we are also looking at investments, down here at the 200, and what Trent does with his 12s, and the intermediates and his tradable lines, and those kind of things you can get in for intermediates. You don't have to swing, and certainly we don't teach day trading here. We're not really day traders here. We are swing traders. We're intermediate term traders and investors, and we're long-term investors. And that's what we're trying to teach. Apple. Same thing with Apple, straight up right along resistance for days. We had earnings, opened up, came down, and now you can see the 9 is rolling right along resistance here. And here's what I'm talking about on the MACD. I'm seeing this and this crossover potentially today. We've already had it. So unless some news comes out or something, is this a time to jump into Apple from a technical point of view? Probably not, okay, because you're seeing the trends head down. Look at the histogram head down, okay, even though you've got momentum, it's still not, it's not where I want to be on Apple. If you're in Apple and you're on an investable line, here's your 200. It's still holding the 50. A lot of people use the 50 as a more intermediate term. It gets you out faster, gets you in faster. You might have a few more trades, but again, that's a good line too for investable on a daily chart. Tesla, same kind of thing. I mean, he got his pay package, but we're going to open up lower. Last time I looked, we're going to open up about where we closed on Tesla. So again, I look at the oscillators. Here's where we crossed over as a negative, and we really haven't been above the MACD since. Okay, so it's not showing me much, and now I'm seeing the stochastic cross back down, and we're seeing the RSI kind of lose a little momentum, but we're still above 50. But again, Bollinger Bands are tight, sideways movement. Am I going to jump into Tesla today? Not the way this chart looks like this. Amazon had earnings up, sideways along resistance, came back inside the Bollinger Band, still have resistance, still above the 9. We're going to open up between the 9 and where we closed. Watch your MACD. We're flattening out a little bit. We're not there yet. A little bit of momentum loss, and we're seeing a crossover negatively on the stochastic. And then Palantir. More Palantir. Palantir earnings down, down, down. The trend is down. Open up, close down, open up, close down, open up, close down. Now we've tested the 50. We're below resistance here, and we're below 50, and we're going to open up below that too. And then you got the Bollinger Band. Here's what you don't like to see. These 3 oscillators that start heading down at the same time. And you say, well, I'm going to buy in. I'm going to buy the dip. Well, maybe the dip's not there yet. That's what these guys are telling you right here. We're still seeing that trend down on Palantir. So just be careful. Some of the others that we had, AMPX came out. Let's see, where were their earnings per share on AMPX. Okay, so we opened up, closed lower. It's going to open up a little bit higher today, but still right under resistance. They were negative 0.4 cents earnings per share versus 6 cents. So they improved a little bit. They're still losing money. Their revenue was 160 or 16.5 million, and they were and the versus the expectation is 17.1. So they missed on that. So there's a little bit of buying in here for this. And what you're buying really is you're investing in kind of the long-term technology story. You're not buying into earnings, okay? Because they don't have any earnings. And then I look at the oscillators. Okay, here's your MACD. Here's the last time you were above the MACD right here, and you haven't been since. You look at the stochastic down. You look at the RSI down. Okay, so is this something I buy into? I don't like, investing in per se a company that doesn't make money. But if you were using the 200, okay, we'll just go back a little bit. You know, we can go back further. Let's go back year to date. On this one, yeah, you would have gotten in and been doing okay. Is this the place again? You're probably just chasing, but you're chasing no earnings on this one. Uh, you're chasing the hope that this company is going to be something in the future. Okay. And it may be, I can't say one way or another, but it doesn't have any earnings yet. And it didn't make the revenue that it was supposed to make. Now, that doesn't mean that emotion doesn't get in there and move this up, because it does. Okay. Then we looked at Oscar. Remember, Oscar was up 8% free market. And I said, well, don't get rug pulled. I went and I said, look, over here, look what happened. Opened up, closed down, opened up, closed down, open up, closed down, open up, closed down, open up, closed down, all the way down, opened up, closed down. Okay. Look at the oscillators. Look at the MACD. Hasn't been above since about the 10th of October, still heading down. Okay. So again, we're looking at earnings of negative 53 cents per share. Okay. Now they have hope that maybe they're going to be doing something in the future, but right now, it doesn't make any money. So they're going to have to find operating cash somewhere, whether that's through financing, loans, bonds, or some kind of stock offering. They're not making that money yet. So as an investable line, here's your 200. So it's coming down to the 200. If you're investing in this and have been, then use the 200. This would be a line you would watch, like I did with IBIT, and say maybe that's the time that I would get out of here. But again, hopefully if you had this, you might have gotten out, at the open, because it came right back down and it closed lower. So just got to be careful. Now here is another one, and this is SciTime. Okay, and this one had earnings, but they had negative earnings. Okay, according to this, SciTime revenue was 83.6 million versus 78.1. And it says earnings per share 87 versus 71. So really, it showed strong guidance also. So you've got this nice gap up on SciTime, but look where it went. It opened here, gapped way up, and then if you bought in by chasing it, you're now a little bit underwater. But that doesn't mean we still can't roll up on SciTime. But again, when I trade, I get out before earnings. I would have missed this, but on the other ones, I would have missed the loss too. So it's really up to what you think. I don't know much about SciTime. Kerry really does. And if you're an investor, you're above the 200. So none of this matters to you at this point, because you're still okay. You got in at the 200, you're still in. You're okay. We look at some of the others. What else we got? Take-Two. Take-Two Interactive had earnings. It's going to open up down here. They are delaying Grand Theft Auto once again, the video game Grand Theft Auto. But if you look back, what did the charts tell us? Well, look back here. This is where we started having some trouble, sideways to down, on the MACD, and we're still seeing that today. Crossover here on the stochastic. It tried to get back up before earnings, and in this case, if you'd stayed in hoping for good earnings, negative 73 cents per share, you would be down quite a bit at open this morning. So you just got to be careful there. I'm going to do a few more here. Let's see, Qualcomm. Oops, let's put the right one in. There we go. Again, earnings on Qualcomm. Their non-handheld division went up, but again, the stocks went down, and then right at the 20, you can see the crossovers, and the stochastic's been telling us a while, since this big spike up, that something was going to go wrong, and it did. So again, that's how we use these kind of oscillators. A few more. Cipher, is running up. You have resistance, and I said yesterday, you got to, even when they go up, you still got to sustainably get past that resistance. And here you've got flattening Bollinger Bands, and we're under resistance again on Cipher. And look what's happening here. We had a crossover, but we had resistance. So you got to use these oscillators and resistance support and the moving averages together, and learn how to read these, and use them together. Use a fuel gauge, you use a temperature gauge in your car. You might be full of fuel, but your car is overheating, so you gotta be aware of all that. You see it starting to tick down just a little bit. And Iran's been a good runner for a lot of you folks. And again, we have sell orders on Iran. And just watch these oscillators too, because we've been kind of sideways, even though we're above the 9. But again, Bollinger Bands are kind of rolling together. And I think that's it. That's what I got for Friday. It's Friday. I don't really like to trade and hold over the weekend. It's called weekend risk. I don't know what the administration is going to do, who's going to start a war, who's going to come out and say what over the weekend or after market closes, and then like we did with the Chinese tariff of 150% that wiped out Bitcoin to the tune of 20 some $1,000s a coin. So again, I don't like to do that, but I'm going to turn it over to Trent while my voice is still here. If you want us to look at anything, here. One more, just as I'm here, I see it right here. I was going to do it before Trent. And Berkshire, we talked about this earlier. Oops, let's do it right. Berkshire B. Okay, we were talking about how money flows, and he's got 800 or 384 billion reasons why you might want to be in Berkshire. Here's your crossover on the MACD. Here's your stochastic. You're getting momentum. Came past the 9, got to the 20. We're still fighting off the 50 here on resistance. So I'm kind of waiting to see if we can get past this 200 to 50 and the 200 and get back into an investable mode on Berkshire Hathaway. But it's had a nice run up. Would have been a pretty nice smaller swing, but you're finding resistance. So we get past that 200, we'll be watching it. And we might do another investment. We did that, or a swing too. We'll do a swing and an investment. We get past that 200. So sorry about that, Trent. Just want to get that out of the way. I saw someone was looking at it. Over to Mr. Bubbles today. What do we got, Trent?
Well, let's take a look at the indexes, but we're going to approach it a little differently today. If you use trading views or you're interested in using trading views, I'm just going to build a chart, how I build them, and to give you an idea how it works in trading views. So I go over here to this plus sign, and that will bring up this screen here. I hit create new layout, and I'll get a screen here in a second. And this is SPY. And so it gives me a general, here's the candlestick chart going back a year or so. And then I've got my volume here. And so there are a couple things I like to add to the chart. And I like go over here to my indicator tab. And I have, you can go in here and type in the indicator you want to use, and then you can star them and create your favorites list. So we're going to start with 3 moving averages. So I'll click this 3 times, 1, 2, 3. That'll give me that. And I'll go over here and I'll adjust my situation here. So I don't use the 9, but I do use the 15 and adjust that there. I like to put it in white. So I do that, make the thickness a little bit bigger, and boom, I've got myself my 15 or trade trend line indicator. And then I go over here to the next one, and I'll use the 62 here. This is my intermediate trend line. You can put any moving average you want. These are the ones that I use more from an intermediate to long-term perspective. Hit OK, and that gives me my intermediate trend line. And then finally, the Tudor Jones 200. I go in there, inputs 200. visual. That's the line of death, at least my version of it. I'll put that there and I hit OK. So now I'm looking at SPY. And if I'm just using moving averages, in this case 15, 16, and 200, what do I see? This is going back to what, October of 24. Let's zoom in a little bit. And what I have is, this is my trade trend line. This is my caution line. If I'm trading above it, all things are good. There's roses growing in the rose garden, and we drink tea at noon. But when I go below this, that's when I become cautious. Maybe I start to go inside, get out of the rain, maybe start looking at the weather, what's happening overall. And what we saw yesterday was about was that a 1% drop? Yeah, 1.07% drop in SPY. That's a sizable candle. Opened up here, opened up at $676 and it closed at 670. This should be, hey, that's a big candle, that's a big move. Couldn't hold its open, couldn't hold its high. Did close above its low, but I should be cautionary area at this point. And so this is, if you're just trading the SPY or investing in SPY, this would show up a flare, a cautionary flare, and you would go, okay, what should I watch for? Well, now my intermediate trend line, that's a yellow line. If I go back in time, I crossed over it back here in May 9th, and I haven't seen it since. But now got close on October 10th. This was the 100% tariff on China statement by President Trump. I'm now back in a point where I'm like, this is cautionary. I'm looking at volume. This is a one other thing to take a look at. If I go up here to my volume tab, open up settings, I can put volume moving average here. I'll put yellow and I'll make it real thick line so I can see it. And what it'll tell me is this is the average moving volume here of volume. That can be a leading indicator to telling you when you have a bottom. You see this break in volume here to here. If I want to figure out how much of a distance in the break in volume. So if this is my average, and I go up to back here, this is from here. Let me actually fix this. So that's 11% increase in volume on a daily basis. That should be an indicator of a bottom or a top. Let's delete that because it's distracting. When I get tops, when I get bottoms, I see volume decrease as the market goes up. And when I get high volume spikes, I typically see a drop. Here, as we see here, big drop. So watch this volume. Use this trend moving average. We see yesterday, we didn't see really a break in higher volume overall. So is this just a natural selling off? Should this be concerning? Or am I more looking for, if I'm looking for a bottom, I'm looking for spikes in volume here, like we're seeing here. You want to see when you find a bottom, or you want to say, like yesterday, we had a pretty sizable drop on SPY. We want to see excessive volume to find a bottom. Right now, I'm not seeing it. So I anticipate I should expect more selling. Now I use an option indicator, and I can go in. I went in and I looked it up. I clicked on went to their website and I purchased this. So I paid for this, but I can click this and add it to my charts here. And calculate now where the option market makers are pricing in high, lows, and how they're hedging. And right now, what we're seeing is that we have they believe they have the most call options they're buying is at 700. So there's hope that this will bounce. Their secondary level is at 680. So this is where they're selling calls to neutralize, selling calls. And then this is your bull bear fight line, 673 today. We closed below it yesterday. So what we should anticipate is more volatility. We should anticipate an expansion of volatility and more choppy markets. And I'll pull up the VIX here in just a second. I'll show you what it looks like. We've got support, third level of support at 665, looks to open up at 667, so right above that today. So that could be a support level, and we could get a bounce today or into Monday. And the bigger level of support is at 660, and then your secondary level of support is at 650. So there is a very strong chance that markets will sell off into, if it's not today or in Monday. Right now, the options market is pricing in that we could see a sell-off down into 660 on the on SPY. That really matches up nicely with the intermediate trend line. So if we get support here and markets come, SPY comes down here, this possibly could be a pivot point. But remember, what is driving this market? Two things. One is narrative, AI narrative. Expansion, the world is moving towards an AI environment, this, that, and the other. Two is credit expansion. From 2020, 2022, we saw $10 trillion injected into the economy. And who knows how many times that was multiplied through lending that banks do to for consumers. It could be 4 or 5 times that. So eventually that credit expansion does contract. And we're starting to see that. We're seeing that in subprime, car lending, household lending, credit card delinquencies, this kind of thing. So we're seeing it. We've seen expansion in credit, an expansion in the AI narrative, and now we're seeing a contraction. So these are signs to me that this market, in this case, S&P 500, the NASDAQ 100, is all starting to lose momentum. And as long as this is going downward, don't assume it's going to turn around, go higher. Watch the momentum. Invest based on the trend of your indexes here. All right, so now I want to look at my RSI. So I'll go over here to my indicators and I'll add the RSI, but also I use the MACD. It's a slower indicator, and I like that. My RSI, wow, I'm dropping. You can see that in correlation with the S&P 500 price. I'm now at 48.30. My line in the sand for RSI is 50. If it's not above 50, there is the strength in this in particular SPY is weakening. We're seeing the weakening of the strength of SPY. That means people are more sellers than buyers. Your MACD turned over, we're in the negative. This is 1, 2, 3 negatives. We're below the bull bear fight line. That's 4. 1, 2, 3, 4 negatives above the intermediate trend line. So there is hope. But what I'm seeing is a contraction or a momentum downturn. We're seeing that momentum increase. We're seeing the RSI decrease. We're seeing the MACD decrease. We're below the trade trend line, and we're below the options bull bear fight line. Those, to me, you should be cautious. Will it pivot? Will we see a bounce off the intermediate trend line? If we do, we'll see an increase in strength in RSI. We'll see the MACD go positive eventually soon after that, and we'll see the market turn. Take into account what drives this market and couple that together and make a good risk management decision. So now let's just hit upon the Dow Jones Industrial Average ETF DIA. We're seeing that here. My lines will come up. I'm below that bull bear fight line at 470. My resistance level is at 480, and my biggest support here is at 455. I've been moving down. My RSI is moving down. My MACD is moving down. You're below the trade trend line. Take caution. Your Qs, same thing, just different index. Remember, the Qs are driven heavily by technology. Technology is contracting. We're starting to see that in the momentum. And then the Russell 2000, this is your small and mid cap indexes. We've been below that trade trend line for a while. We hit that top at 250. We are now again below the bull bear fight line, and we're sitting right on support at 240, the intermediate trend line at 240. Yet my RSI just declines and my MACD declines. And so this is, to me, this is cautionary. Watch this volume. Does it break trend? If we see a break in trend, like a spike, a big red candle or red volume indicator here, and we see big downward candles, we may be coming to some sort of support level. Could be at 235 or 230. Let's take a look at gold. This is the GLD gold. We found support here at the bull bear fight line, right in this area, at 359 on GLD. This is the ETF of gold, but we have resistance, big resistance level here at 380. So are we starting to see an accumulation? Is gold actually going to be used for what its purpose is, and that is a risk off investment or trade? Possibly, but we still have a declining RSI, but we're looking like it's going to possibly turn higher. Yet our MACD is still sloping down, but our histogram here is starting to move higher. So remember, MACD is a slower indicator. It's not quick. You're going to get a slower change in direction. So it's good to couple different indicators with here. You're seeing volume has declined since its top back here. Okay, so you had a big sell-off on the 17th of October, a pop-up, and then a big sell-off again in October 21st, and it's declined since then, but our volume has declined as well. So we may be finding a bottom here. So this could be a support level that we could see a move higher in gold. And then let's just look at the VIX. Actually, we'll look at the 20, the 50, and 200 percentage of stocks above these. 34% of the stocks are above the 20-day. We're seeing a big move, a big candle yesterday, down 13.18% versus the day before. On the 50, down 8.84%. So we're seeing 35% of stocks are above the 50. And then our basement, our foundation, the 200% of stocks below the 200 or above the 200 is 51.71%, and that's down 3.16%. So if I see this accelerate on the 20, on the 50, I need to keep a big eye on the 200. So bottom line is things are rolling over. Momentum is rolling over, and it's a cautionary picture. When it comes to the bond market, this is where people go for safety. But in particular, what I'm seeing here in the high yield bond market, the junk market, is we're seeing again a spike in yields. So this means people are selling high yield, higher risk bonds. We've seen a move here. Yesterday was up 1.8%. We're just slowly seeing it gradually move up. You saw a big spike in yields back in April 7th. If you go flashback, what was the bottom of the S&P 500 in April? April 7th. So you saw that decline, which meant more people took on risk, driving high yield bonds, yields down, bond values up. Now we're starting to see a little bit of a reverse. We want to see a break above probably 7 on this 7% on the average high yield bond index here. So right now we're starting to see a rotation out of risk and into more risk off environment overall. So keep that in mind as we go into the weekend. There is one thing that could show a level of bullishness next week, and that is there's funds called vol controlled funds. And these funds are used to hedge portfolios by big institutions. and they use what is called realized volatility. And that realized volatility next week will roll off a 3-month average, a piece of the 3-month average, creating a buying of a readjustment to risk on in volatility. So we could see a drop in volatility. And actually, I didn't show that chart. Let me just show it real quick. And that was the VIX. Today, the VIX is back in the chop bucket at 2058 pre-market. So you should anticipate volatility to increase, possible downward trend in stocks, equities, and if we see this basically drop below 19, then it becomes more of a neutral to bullish environment. But just take into account what two things are driving this market and have been for the last 5-6 years, and that is the narrative, the big narrative, and that is AI, and credit. Expansion of credit, markets go up. A retraction of credit, markets go down. Just keep that in mind as we navigate the next couple of weeks and into next year. All right, Mark. That's what I got. You're on mute.
Hey guys, can I get in?
Yeah,
Sure.
please.
All right, this is Brian. I'm using on the chat, but I'm not able to chat because I've been driving to Cocoa Beach. So I just arrived, so I am able to talk this time, where normally I chat.
Cocoa Beach,
Yeah.
very nice.
Yes, it's
Are
beautiful here.
you're from like Tennessee, aren't you?
Yes,
Nashville?
Nashville.
Yeah. So
Uh-huh.
you're taking vacation?
Yep, taking a vacation. So, so it kind of leads into what I want to talk about. I'm gonna be a little long-winded, so I hope everyone is patient with me.
I got coffee.
All right. So while everyone was sleeping, I was driving here. So I was listening to CNBC in the UK, kind of the early broadcast from the States. And there was a debate there that reminded me of the debate between Mark and Paul. And so I had listened to it, and there's a couple of things I wanted to say about it. And I first want to talk about the debate that you all had, Mark and Paul. And I think that when we give different views that is different from Mark and Trent, that's a good thing. And it allows us to be able to see one view versus another and kind of make our decision and come up with our own perspective. And I think that's something that should continue, because I think we got so many people on the call, in the chat, on the Discord, that not only have a lot of knowledge, even though we're all here to learn as much as we can, but have a lot of knowledge, but also have good results. And Paul is he's very shy about how he's doing this year. He's doing very well with the results that he's been doing. So I do want people to know that Paul's just not kind of shooting from the hip. He is someone who is doing very well with the system that he does. And I think it's good that we see how people do things and how people are doing. Because if you go in the live chat, you've got Paul, you got Scott, you got Dr. Dave, that all have different systems, but they're sharing what they're doing, and they're doing well. And I think that helps all of us when we're able to see that. And then obviously, if you look in the Discord, you'll see that as well. And even in the chat, you have people like Spruce, Sirius, who I know is Esther, that post some of the things that they're doing, and they're getting results with their system. And I think those are things that should be brought out. I don't want to keep calling people's names because I'm gonna miss somebody, but you have people like I would say that every person in the chat with the name Dave or David, I think it's doing well. I would say that because we got quite a few of those. But I
So
do want
should we all change our name to David?
to, I guess so. If
Okay.
we can do well as they are, I guess so. But I do want to say that just because, some people may look at the disagreement and whatnot and may feel uncomfortable about it. Paul may have felt even uncomfortable because he was getting ganged up a little bit, but I think it's very good that we all get to see those different views.
Well, I
So
mean,
that's the
Brian,
first
I'd
part
like
of what I
to,
want to say.
yeah.
can I address this?
Yes.
I do appreciate the point of views. My concern is that one's view doesn't becomes gospel and it how do I put this? And other elements are not taken care of. From what I understand, and from what I see, the 8 hours that David was on the Discord yesterday, I saw was like, wow, that's been a long time. And Paul are momentum traders. The majority of people who have come to Best of US Investors are more long-term traders. They were introduced to Best of US Investors by Kerry, most likely, and he's more of a fundamental long-term investor. There are three personalities with Best of US. You have Kerry's personality, which is fundamental, AI-driven focus. He's looking at earnings per share and revenue and many other fundamental elements. Mark, Kerry is, or myself, is more intermediate. I combine the fundamentals and the long and intermediate term. Because of my background, we managed money on a longer term perspective, but we took in those elements of technicals and fundamentals. And Mark is more of the swing trading element. This is looking at patterns, behavioral patterns in stocks and markets, and identifying the swing higher. And that could be a swing of a day or a month. And so what we're trying to do is create a combination of education and bringing all three of these together. Brian, my biggest concern is everybody has done fantastic since April. That is all I've heard. Up 100%, up 300%. I ran 600%. Mike Kerry is even like talking about I ran up 60%. But having been doing this for over 26 years, I know what goes up will come down. And it is good to have that discussion. But the channel, in my opinion, is based on bringing those three elements and maybe a fourth, risk management. Because what I don't want to see is you buy a stock at the top of its spike, like not Amazon we spoke about the other day. Yeah, they had great earnings, but markets are driven by liquidity. That's simple. And we saw Amazon spike, 3 or 4 days higher, and then now it's falling. And that's where I look at this and I go, okay, if you're like trading it and you don't plan to hold it more than past the market close, that is a day trader approach. In my opinion, for me, that's not my personality. My concern is that going off, if we deviate to the day trader kind of approach, then that deviates the whole company and what our message is as three people. I do think it's healthy to have discussions. I don't like at all how that discussion escalated. I'm not going to have it anymore, to be honest with you, because I think it puts off the people who have come here to meet, who have come here because of what we're trying to put out there, and that is uh, smart, intelligent investing. So when it gets to those kind of discussions, I'm not going to have them anymore. I'm just going to shut it off. So I apologize to those who may get cut off, but I don't want that to be the theme of this channel. Paul does, I don't know anything about Paul's trading. I don't. All I hear is, and I see is, are things that make me nervous. And I'm afraid that certain opinions will suck other people in to areas of danger. And Paul, if Paul's doing great, great. He probably has a skill set that he has developed over the years. Fantastic. It's the other people that that could influence that could be dangerous because some people know when to get in, but they have no idea when to get out. And that is my concern. So I don't want discussions that are heated like that anymore. I'm just gonna shut it off because I don't think it's valuable to anybody here. I think it annoys people at some point. I've gotten messages about that, but I do welcome Paul's opinion, Mark's opinion, Bob's opinion, Brian, your opinion. I want to hear it. I think it's good for the channel, but I think we have to do it in a constructive way, but also keep in line with what Kerry set out to do. And that is supported by myself and Mark. And so to address your statement there, what was your next thing?
Okay, I'll make a quick comment before I go into that.
Yeah.
I agree. I agree totally with the being able to not let it get heated the way it did. Kerry did build this channel. I remember back when he started the channel that he wanted this to be about us sharing ideas, which we got to make sure that we're able to do, even if they're different. But we got to do it in a constructive way. So the what I saw, this was early in the morning. This is probably 3 o'clock Eastern. And so the debate was about the valuation of big tech, whether it's a bubble or not. And it was in line with the same discussion that Mark and Paul had. And the one view of it was with, and I think they were specifically talking about Tesla at the time, and with the expectations that were there, whether they be able to be met, and then talking about valuation. The opposing side of that was the valuation may not necessarily be why or what the market is most concerned with. The market is most concerned with the earnings and the projected future earnings. And so they got into a good discussion about that because, for an example, if you think about how NVIDIA got started a few years ago and this AI thing got started, they kept beating on earnings and they kept raising forecasts for the future. And then the market rewarded them for that. As a result, whenever, and I know most people know this, but I just want to restate, whenever the market buys and buys off of the earnings and projections, the valuation goes up because people continue to buy. So his argument was that the valuations being high isn't necessarily the reason why at a given time the AI bubble will burst, and that was basically the gist of it. And and I know that the question that may come up, especially from you all from the discussion, is if valuations is not a concern, then why the sell-off, right? And that is his argument on that was the sell-off is mostly because of the fact that the market believes that the Fed's not going to cut. And so money's being taken off the table because of that. So I wanted to get everyone's opinions on what they thought about that. And again, this was early in the morning, so I know there's some stuff I missed, but I'll try to post it if I'm able to see it online.
Yeah.
But thanks for
So
giving me the time.
Yeah, Brian.
yeah, Brian,
I
absolutely.
want
And thank you for supporting and being part of this.
Thank you,
I-
Brian.
to
Yes,
say
sir.
that I've never said that we're in a bubble. I said I think we're in a valuation issue, and I've gone over my facts on evaluations, especially when we're talking about Palantir being at a PE of 600. Okay. Uh, so yeah, historically we are at high valuations. That's just a fact. Okay. Historically, we have record numbers of delinquencies in credit cards and consumer debt, and same with government debt. We're in a different time than we were in 2000, which I went through. I've been through 87, 2000, 07, and all the ones in between. And so if I bring up things about the economy is, and I've always said the economy is not the market, but eventually they do meet. And when people start losing jobs, it affects it. And so uh, my style of trading is not momentum trading. I do not trade outside the Bollinger Bands. I have trading guidelines, which you guys can read. Okay. Uh, Trading outside the Bollinger Bands is more of a daily thing, is more of a day trader. And we're not teaching day trading here. And if there's plenty of channels that do day trading and much better than I would ever do. And we're trying to preserve wealth and grow wealth uh, within uh, within the confines of our tribe. Okay, so we have a lot of different views. I don't know what personally gains you guys have. I don't. You don't post your gains. Okay, I don't see gains. Uh, you can have gains in day trading, but that's just not what the focus of the channel is. I do have trading guidelines, and when I evaluate, I do them to my trading guidelines. And I've always said, you guys have your own trading guidelines based on your reward, your risk and reward scenario. And I've always said, if you want a momentum trade, that's fine. If that's within your trading guides, then go ahead and momentum trade. But I'm not going to momentum trade, okay? Because it's hard and you have to spend some time watching it. And I think a lot of people here don't want to be fixed in front of their computer 8 hours a day. Uh, Momentum trading or day trading, okay? I certainly don't have the time to do that. I have other things to do in life, and I've done it before in my professional life of financial. I've been doing this for 40 years on my own. I've been doing it came up with in a company, Ameritrade, when it started out, ran through the whole thing, saw people get wiped out. Margins are at high, just like they were in the 2000s. I try to tell you, look, this is how markets work when you have margins like this. And we saw it with Bitcoin, a couple weeks ago, with all that leverage, how markets can collapse on themselves, and before you know it, you're out. Okay. I try to teach discipline in in technical analysis. What are moving averages? What are oscillators? How do they work, and how do they tell you what the probability of the future may bring? Not always. It doesn't always happen because we don't know uh, unknown market conditions. Um, but it's a lot. We've got a lot of people with a lot of different goals here, and if you want a momentum swing trade, go ahead. But again, I'm not saying there's a bubble. I'm just saying valuations are high. I'm seeing a lot of other things in the market with job losses, with uh, delinquencies, with debt, and Trent brings up what's happening in the repo market. And these are all things that we have seen, Trent and I, before in 87, in 2000, in 08, that are lining up. I look at history a lot. I read a lot of books about the history of the market. And I think you need to know that and not get caught up in all the euphoria. And I think we're seeing that you can only spend so much. I don't care how much these AI companies spend. If there's no return to the shareholders, you're going to see the devaluation of their stock price. So hopefully that helps. But I like everyone's opinion, and I don't mind discussion. And if discussion gets a little heated, I'm okay with that too, as long as we don't get personal, start calling each other names, which we haven't.
I want to point out that I'm happy that Brian chimed in because he brings a breath of fresh air regarding his even keel. Because we sometimes take it too serious. We're just people trying to make a little money here, and he brings a good positive spirit. The conversations that I have with him, so it's a pleasure chatting with him. It's not a fighting back and forth. It's like, okay, this is his opinion, this is my opinion, go back and forth. So thank you for chiming in and bringing that. I appreciate it very much, and I know that you're doing well as well. And I'm happy that you are. And I know that we also look out for people that aren't doing well. We will talk amongst ourselves. And if we're not, we try to help, you know, and that's cool. I like that whole camaraderie and welcomeness. So thank you, Brian.
Thank you, Paul.
Yeah.
Okay. Anyone else? All right. Well, I appreciate open discussion and appreciate Brian driving all night and thinking about this. And I appreciate everyone who's on this channel. We do more than just trading. We do a lot of risk management and, you know, preservation of your wealth. I don't want somebody to go through another 2000, another 2008, because I've seen it and I've seen how it destroys not only yourself, but your relationships and your livelihood. And so I'm going to be cautious, and I've always been cautious. And I'll tell you what, you know, I'm not going to go out and I'm not going to risk my money. And that's the way I trade, and that's the way I invest. And if you have a different investing trade or trading style, that's fine too, because it's your money, it's your situation.
So I think something that everybody on this call, everybody who listens to this call, in this discussion here, there's one thing you need to determine, and that is what kind of investor you are. Number two, why you're doing this. If you are coming to this because you're trying to create retirement, trying to create wealth, you're more of a long-term investor, take what comments are made. And I think this is just, you have to take responsibility and do your own due diligence. Take them and ask yourself, does that fit my approach and what I'm ultimately trying to achieve? Okay. Once you determine that, then you can filter through those ideas. If you're a short-term trader, then comments that are made towards short-term trading match up with your approach. If you're trying to grow your wealth so you can retire down the road, then you malign those comments that match up with that. And that's the cautionary element I have with this, is because I have watched people walk through the door and say to me, why am I not making 100% on my returns? Well, because your goal is to retire in 20 years and because you can't handle any more than 5% downside risk. That's why. So it's very important to do your own personal due diligence. And this is something that I want to create, is more of a identify who you are and why you're trying to do this and what you're trying to achieve. If you're looking for long-term investing, determine that, match up with the different approaches that we offer here at Best of US Investors. If you're more of a trader, day trader, that kind of thing, then take those elements that are talked about, because I don't teach momentum trading. Mark teaches swing trading and identifying behavioral patterns. If that matches up with that for you, then do it. Use that, but be very cautious. But more importantly, take responsibility. Ask questions. Be nice. I'm not going to have what happened the other day, this, that, and the other happen again. It's just not going to happen. And one last thing, the whole bubble thing. I believe there is a bubble. I believe there's a credit bubble. I believe there is a headline news bubble. And I'm seeing it roll out. And so that, for anybody who says, Mark said there's a bubble, he did. I did. Look at my background. There's a credit bubble, in my opinion. Right or wrong, that's my opinion. That's where I stand. So with that said, if there's anything else anybody wants to hit upon, we'll end it. If not, we'll end it there.
I have a short
We'll go from
remark.
there.
Go ahead, Zeke.
What's that? Yes,
I
please.
have a short remark. I think all of this is kind of covered by the mantra of our mentor. There's different styles of the way everybody deals with the stock market, swing trading, investing, and so on. It all boils down to, though, even with Mark, he'll say he doesn't know much about the companies that he's investing in, but he does know this key factor, why he's invested in them, why he's bought them, why he owns them. You know who I'm talking about, don't you? Of course, it's Kerry. If you don't know what you own, why you own what you own, you shouldn't own it. And it doesn't matter whether you're swing trading, it doesn't matter what the discussion is about, and it only matters one thing. If you don't know why you own it or why you bought it, you shouldn't own it. I think that covers it all. The discussions are learning things to me. A lot of what is discussed is over my head, but not all of it. And I gradually, if I am around long enough, I will know all of it. That's my mission, and that's why I belong here. I think this is a great place. I have not belonged to any other groups, investment groups, but I have belonged to other groups that don't encourage this discussion, and they kind of like go nowhere. That's one of the good things and the key things about this group here. Anybody can speak up and say what they say and give their opinion. And I understand what you're trying to say, Trent. As long as it doesn't get out of hand, it's good. But if it does get out of hand, you are the moderator, so you have to do something about it. It's all good stuff. Let's have a good weekend and come back on Monday with some new
Sounds
points
good.
of view.
Zeke, thank you for all that. I appreciate it. Zeke's been with us a long time. I've been with Kerry longer, well, not from a family point of view, but on this channel than Trent. I was brought on with Drew, and Drew dropped off, but I've been with Kerry probably 4 or 5 years, 4 years, something like that now. And Kerry and I do not agree on everything, I can tell you that, but we respect each other's opinions, and he finds value in having me as part of this channel, and I'm happy to be a part of this channel. And Trent, I love Trent's perspective on things, and Trent and I don't agree. We agree more with each other than we probably do with Kerry on a lot of stuff, but we don't agree on everything either. But I find through talking, and Trent and I talk all the time, offline, and I learn a lot from Trent, and I hope he learns a lot from me. And when we were just talking yesterday, that really, what is the best thing about what has been created with Best of Us Investors? And it's what Zeke just said right here. We can sit and we every morning we talk to each other, and if you guys bring up something, we talk about it, and there's a lot of channels that don't do that. They just sit and tell you what to do, and we try to give an opinion based on our experience and then listen to everybody else. So what I really appreciate about where this channel has gone is basically this meeting here, and then Kerry's 3 o'clock meeting, and then the dialogue through the Discord. And I think that's just something that's very unique, not only in the YouTube world, but in this Discord world. So I appreciate everybody out there.
All right, we'll wrap it up there. We will be back at 3 o'clock. Kerry will have his call. I'll be interested how what he has learned this week, what his viewpoints are on what's going on. It will be open discussion, so please join us for that. And we'll go from there. Thank you all for your opinion, Brian. Thank you for bringing this up. I think your feedback is what drives this, where we go as Best of US Investors, and we do it in a kind and civilized way. We all can prosper from it. All right. Have a great day. Have a great week. If I don't see you at 3 o'clock, have a great weekend. Live loud.
See you guys.
Thanks,
Bye.
Trent. Thanks.
Thanks.